Hello everyone, I am Bob and this is the Home Bitcoin Immersion Mining channel. In this design series episode, I'm going to cover miner efficiency and how to use that info in selecting miners for your home mining setup. So with that, let's get started. But before getting into the data, I just want to mention the sponsor of this episode, Brains, and their support of Stratum v2. So to give a little history, over 10 years ago, a developer by the name of Slush developed Stratum version 1. This Stratum software is the protocol that coordinates how miners and pools communicate to contribute hash rate to the Bitcoin network. In other words, it's the protocol that connects your miners to your pool, and pretty much all Bitcoin mining pools have been using Stratum v1. Recently, Bitcoin developers, including a couple co-founders of Brains, have rolled out a huge update to this protocol called Stratum version 2 or v2. Stratum v2 has a bunch of really important updates, including encryption of transmitted data between your miners and your pool, lower bandwidth for communication between your miners and the pool, and the ability for miners to construct Bitcoin blocks. Now, the Brains OS Plus firmware has native support for Stratum v2, and the Brains pool is one of the first pools to support using Stratum v2. And this is another great reason to use Brains OS Plus for your miner and Brains pool for your mining pool. And if you are not using Brains pool, ask your pool provider when they are going to make the upgrade to Stratum v2 to make the most of your Bitcoin mining setup. Okay, so a little over a year ago, I released the first Home Bitcoin Immersion Mining episode, and in that episode, I covered a quick history of Bitcoin mining hardware efficiency. Now, when that episode was released, the data was already a bit outdated, and a lot has happened in this past year. New mining hardware has entered the marketplace, the Bitcoin network hash rate has skyrocketed, and the Bitcoin price has appreciated quite a bit. So I figured it would be a good idea to give an update to that data and cover how this information can be used to pick mining hardware for a Home Bitcoin immersion mining setup. Now, when it comes to miner hardware efficiency, miner manufacturers typically list their efficiencies in terms of joules per terahash. And here's a quick plot of how that efficiency has changed over time as miner technology has progressed. Note this is a logarithmic scale showing the incredible improvements in ASIC chip performance over the years. Every year the efficiency is improving as manufacturers get better at squeezing additional hashes from every joule of power. And in this last year, the new additions have been Antminer's 21 series and Whatminer's 60 series miners. Both of these miner manufacturers have models that are now pushing efficiencies below 20 joules per terahash. But what do these efficiency values mean for a home mining setup where, if you're like me, you're using your miners over many years with a focus on generating heat around your home? To answer that question, I think it helps to look at hardware efficiency a little differently. In a home setup using mining power for heating, the amount of power sent to the miners isn't going to change much over time. Unless there's a big change to your HVAC system or you add on a whole new addition to your home, the amount of heat needed to keep a home hot on a cold day will be the same year over year. In addition, with aftermarket miner OS updates such as Brains OS Plus, miners can be overclocked or underclocked to match that needed power level. Because of that fact, I think it makes a little more sense to flip that efficiency ratio and instead look at miner efficiency in terms of terahash per kilojoule. By writing it this way, the focus isn't on how much power is spent per hash, but instead on how much hash power a miner can generate when given a set amount of power. This is more aligned with home heating mining setups having constant power inputs, and when you're comparing different miners, this makes it really easy to see the differences in the amount of power you'll make with that constraint. For example, an older Antminer S19J Pro 204 terahash machine has an efficiency of 33.3 terahash per kilojoule. Compare that with a brand new Antminer S21 200 terahash machine having an efficiency of 58.8 terahash per kilojoule. If you're supplying the identical power to heat your home, the newer miner has a 76.6% increase in efficiency, which means a 76.6% increase in Bitcoin mined while generating the same amount of heat. Now, overclocking or underclocking will change the efficiency of a given miner, with overclocking reducing the efficiency and underclocking improving the efficiency. But in general, if you're not pushing the miner too far out of its normal operational range, looking at miners using this metric can be an easier way to make a rough comparison between different miner models. And one last detail before moving on, when I flipped the efficiency metric, I could have kept things in terms of joules, but by using kilojoules, this aligns with power usage, which is usually given in kilowatts, and this also provides an easier to use range of 0 to 100. And as you can see in this logarithmic plot, modern miners all fall within a range between 10 and 100 terahash per kilojoule. And before I get any further into miner efficiency, I just ask that you hit that like button below and hit the subscribe button if you haven't already. This will help grow the channel and get this information out to more people just like you. Now, the other reason I like this flipped efficiency ratio is that I think this aligns mining hardware efficiency better with something called hash price. Hash price is a really useful metric introduced by the folks at Luxor Mining, and if you are a Bitcoin miner, hash price is something you should watch. Here's a screen grab of the current hash price data, and I have a link below to the website where this metric is tracked. In their words, Luxor describes hash price as a function of 4 inputs: network difficulty, Bitcoin price, block subsidy, and transaction fees. Bitcoin hash price will change with every new block added to the blockchain. Hash price is positively correlated with changes to Bitcoin's price and transaction fee volume, and negatively correlated with changes to Bitcoin's mining difficulty. Now, hash price has the units of dollars per hash power per day, and so this metric gives you a good idea of what you can expect to earn on a daily basis from a given amount of hash rate generated by your miners. And although this is reported on a daily basis, you can see that changes happen over the course of years as Bitcoin moves through halving cycles and other Bitcoin ecosystem evolutions over time. So this metric can give you an idea of the possibilities of increases or decreases in the dollar return from your mining over the many years you might be running your miners. For example, if a home system is built during a hash price low point, there is a higher probability that the dollar return may increase in the future. And more importantly, if the hash price is currently at an elevated level, say 10 cents per terahash per day, you might want to plan for the future where returns may be lower. Now, as always, past performance is no guarantee of future results. We have no idea how the Bitcoin mining industry will evolve over time, so be really careful about relying on hash price historical data or attempting to use it to predict future mining returns. And one last point here, working with hash price assumes that you are selling your Bitcoin to recoup dollars for electricity costs or other reasons. If you are just using your mining to stack sats, hash price may not mean much for you, since 1 Bitcoin will always equal 1 Bitcoin over the long term. So taking all of this together, when looking at a home setup, there is a set amount of power available for mining or a set amount of power needed to provide home heating. Using the flipped efficiency metric, different miners can be compared to see the relative differences in Bitcoin mined at that set amount of power. This can help you narrow in on what miners you might want to buy. The hash price over the past years can then be used to understand how the dollar return for this home mining setup might vary over the longer term. So this brings us to the whole point of this episode, which is to provide some guidance on what miners to use in a home setup. And to start with a disclaimer, as with everything else in Bitcoin mining, you really should do your own research and analysis to understand your cost, your expected return, your power availability, and your home setup before purchasing mining hardware. But to start, here is a zoomed in plot of miner efficiency since the last halving event in May of 2020, along with the best fit line through that data. This shows on average, new miners hitting the market today would generate about 3 times as much Bitcoin as miners sold 4 years ago. So as you likely already know, the newer the miner you can buy, the more Bitcoin your setup will mine. But this line is also really helpful since it shows which miners are better or worse for their age. If a miner falls above this line, it is ahead of the historical efficiency curve, producing more Bitcoin than expected for a miner made at that time. There are a lot of reasons why a miner might show up here. This may be a new technology or new generation of miner, or maybe a manufacturer is pushing existing, trusted technologies to new levels based on confidence in past designs. In contrast, if a miner falls below this line, it is underperforming for its age, and there may be other new miners that might do better. This underperformance might be due to manufacturers trying to re-release old technology that is just getting out of date, or selling new hardware that is at the beginning of its performance curve and is being released in an initial, less efficient configuration to work out the kinks. In either case, it helps to jump on Telegram groups, listen to podcasts or other sources to understand how over or underperformance of a given model relates to its model history and its reliability. For a home mining setup where the miner might be a key part of home infrastructure, it might be a good idea to buy an older, well-known model or buy an underperforming new model if it means more reliable miner over the life of your system. Okay, so that's all I've got for this episode. And if you want to learn more about how you might use your selection of mining hardware to heat your home, here's a great episode to get you started. Like, subscribe so you don't miss any new episodes coming your way. And with that, bye.